Hello everyone, and welcome back to the channel where we dive deep into the fascinating world of hard-to-borrow stocks and potential short squeeze setups. Today, we're putting a specific company under the microscope, one that recently popped up on our screener with some truly eye-watering borrow fees. We're talking about RYOJ, or RYOJ Company Limited. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's zoom in on RYOJ Company Limited, trading under the ticker RYOJ. This company operates in the industrial sector, specifically within consulting services and health services in Japan, offering labor and corporate consulting. With a market capitalization of $48.05 million, RYOJ is a microcap stock that has seen some interesting price action lately. Short sharp RYOJ 30-day. Over the last 30 days, RYOJ is up a modest 5.0%. However, the last 5 trading days tell a different story, with the stock surging an impressive plus 42.86%. Today alone, RYOJ saw a gain of plus 8.25%. Highlight today's candle. But why is this relevant for a short squeeze discussion? The key lies in what's happening behind the scenes in the borrow market. What's cost to borrow and why it matters? First, let's quickly explain what cost to borrow, or CTB, means. When short sellers want to bet against a stock, they first need to borrow shares from existing shareholders. They then sell these borrowed shares, hoping to buy them back later at a lower price, return them to the lender, and pocket the difference. But borrowing shares isn't free. The cost to borrow is an annualized fee that short sellers pay to hold onto those borrowed shares. When a stock becomes hard to borrow, it means there's high demand from short sellers and or a very limited supply of shares available to lend. This scarcity drives the CTB fee through the roof, often exceeding 100% annually, meaning short sellers are paying over 1% of the stock's value every day just to maintain their position. These fees are a direct hit to their profit margins and can make a short position extremely expensive to hold. Why this stock is hard to borrow right now? Now let's apply this to RYOJ. Short data points our screener flagged RYOJ because its cost to borrow fee currently stands at a staggering 554.0% annualized. That's not a typo. To put that in perspective, a short seller holding a position in RYOJ is effectively paying over 1.5% of the stock's value per day in borrow fees. What's more, this fee has seen significant momentum, increasing by a sharp plus 67 percentage points over just the last 5 trading days. This indicates rapidly increasing demand to short RYOJ, or rapidly shrinking supply of shares. Speaking of supply, as of our last check, there were only 1,000 shares currently available to borrow. Compare that to RYOJ's estimated float of 2.3 million shares, and you can see why this stock is extremely hard to borrow right now. Squeeze mechanics explained. So, what does it mean when a stock like RYOJ is hard to borrow? It creates the conditions for a potential short squeeze. Here's how it works. High borrow fees, coupled with a shrinking supply of available shares, puts immense pressure on existing short sellers. If the stock price starts to rise, as RYOJ has done with its plus 42.86% gain in 5 days, short sellers face a double whammy. Their position is losing money, and they're bleeding cash daily from high borrow fees. This can force them to cover their short positions, which means buying back shares in the open market to return them to the lender. This buying pressure, initiated by short sellers, further pushes up the stock price, which in turn triggers more short sellers to cover, creating a cascading effect known as a short squeeze. Our internal composite squeeze score for RYOJ currently sits at 45.2 out of 100, reflecting these underlying dynamics. However, it's crucial to understand that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have very strong conviction that the stock will eventually decline, and they are willing to pay a premium to hold that belief. Dilution risk check. One critical factor to consider when evaluating any potential squeeze candidate is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This typically lowers the value of existing shares and can completely negate any short squeeze thesis, even if cost to borrow is sky high. We conduct a thorough check for recent dilutive SEC filings like SMINUS1s, SMINUS3s, or 424BS. For RYOJ, we found no recent dilutive SEC filings in the last 90 days, which is a positive sign for a squeeze setup. Additionally, there have been no recent reverse splits for RYOJ, which can sometimes be a precursor to dilutive financing. Before we continue, let's quickly reiterate our important disclaimer. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given RYOJ's current setup, the 554% CTP, the rapid increase in borrower fees, and the razor thin supply of 1,000 shares available to borrow, what should traders be watching for? First, continued price momentum. The plus 8.25% today and plus 42.86% over 5 days shows current interest. Second, observe the volume. Today's volume for RYOJ was 189,200 shares, which is only about 0.4x its 30-day average volume of 480,643 shares. A true squeeze often involves significantly higher than average volume as short sellers rush to cover. Any further sustained increase in price, especially on increasing volume, and a continued decrease in available shares to borrow, could signal intensifying pressure on short sellers in RYOJ. RYOJ Boba Company Limited. RYOJ presents a fascinating case study in the hard-to-borrow market right now. The astronomical cost to borrow and extremely limited share supply are clear indicators of significant short interest and underlying market tension. Whether this tension eventually boils over into a full-blown short squeeze remains to be seen, but these are the precise conditions we look for when analyzing potential setups. Remember, these situations are highly volatile and carry significant risk. Always approach them with extreme caution and thorough due diligence. If you found this deep dive into RYOJ informative, please hit that like button, subscribe for more unique stock analysis, and let us know in the comments what other stocks you'd like us to analyze next. Thanks for watching, and we'll see you in the next video.